Hello and welcome. You're watching Last Take on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi, Batra, and on this show we'll be recapping for you the entire day's market action and also help you understand what really moved the markets today and what will be the factors that the markets will be tracking in tomorrow's trading session as well. Let's quickly take a look at the closing levels today. Again, it's been a sharp weakness that we have witnessed for the benchmark indices. Remember, it was the F&O expiry day, and in fact for the entire March series we've seen a 5% drop for the markets this time around, and this is the biggest one-day drop in a monthly series that we have seen for the Indian domestic indices. For the markets, specifically when you talk about the benchmark indices, the Sensex actually lost about 740 points in trade, down about 1.5%, 48,440. That's the level at which the Sensex has closed at. Remember, we've also given up the 49,000 level as of today. Right in the early morning trade, also we had a subdued opening, and the volatile trade followed with the sharp cuts that we have seen even in the closing hour as well. Now, when you talk about the Nifty 50, at one point in time it did test even the 14,300 levels and inching towards the 14,250 levels as well. Slight recovery did come in from the low point of the day. However, the bulls did not manage to climb up much further, but 224 points of a cut was seen on the Nifty 50 index, down 1.5% even in today's trading session. What's a sharper cut is seen in the Nifty banking index. Now that index is really inching closer to, in fact, some recovery actually came in for the second half of trade as far as the Nifty bank is concerned. 33,006, that's the level at which the Nifty bank has been shut shop with a loss of 286 points. So the recovery has really happened in the banking majors, especially the private banking majors. Some buying from the lower levels has really come in. Remember, in the half trade of today's day, we had seen the Nifty bank slipping even below the 33,000 mark, but there has been some bit of a recovery, and it has managed to end with 0.8% kind of a loss. For the broader markets, the cut has been sharper for the mid-cap sector. If you see from the morning itself, the first tick only, we had started to see that there was a pain point developing in the mid-cap sector. 446 points gone there, over 2% of a cut, 19,643. That's the level at which the mid-cap sector has closed today. When you talk about the BSE small cap, however, 1.9% of a cut was seen here, 378 points of a loss, 20,062. That was the level at which the markets have closed. But overall, it was a broad-based sell-off that we saw today amid the choppy session that stayed for the entire day, and that was largely expected on the back of the F&O expiry that we have seen today. Moving on to see how have the sectors really performed today, but before that, you look at the factors which were behind the market fall today. Of course, we are continuously seeing the rise in COVID-19 cases. That is definitely weighing on the sentiments in the markets, whether it is in the domestic markets or in the global markets as well. Of course, there are concerns over fresh lockdown, and parts of the country and several parts of the states have started to issue some kind of restrictions, if not a complete lockdown, whether it is a weekend restriction or an overnight restriction that they are putting in. But these kind of restrictions are again dampening the sentiments for the markets. Of course, we global cues have been heavily weighing on the Indian market sentiment as well. And yesterday, like we had seen about 2,000 odd crore rupees of sell-off in the Indian markets by the foreign institutional investors. We'll just have to wait for the data today. However, the sentiment is still on the sell-off side when you talk about the foreign flows. Moving on to the sectoral performance of the day, and you can clearly see that there's only just one index that managed to marginally inch up in the green as far as the closing is concerned, and that was the metal index. But sharp cuts were seen in realty, in banking space, especially the PSU banking space. If you see, the private banking space is where you've now seen the narrowing of the cuts to just 0.8%. So the last hour buying that we have seen from the Indian banking sphere, specifically the private banks, those have actually helped the markets to stem the kind of losses that we have seen in intraday today. But auto space, sharp cuts there, 2.7% gone for that index. Again, over 2% cuts were seen in the defensives as well. When you talk about the FMCG sector, the IT sector, both of them losing over 2% in trade. The media stocks, that's where most of the cuts are coming in, and the pressure built up with over 3%, even though the weightage is not as high. But that stock or those stock sentiments also were actually coming crashing down in today's trading session. The realty stocks did feel a whole lot of pressure in today's trading session as well. But all in all, a broad-based sell-off is what we can see in today's trading session. Moving on to the gainers now. So the Nifty gainers included stocks from the metal space, which actually managed to inch up in the green towards the close. Tata Steel, rose about 2.8%. 3% in today's trading session. The banking space, you can actually see sharp buying coming in ICICI Bank and HDFC kind of stocks with 0.5% uptick, and that managed to pull up the private banking index. L&T rose by 0.3% and 0.7% gains were seen in the pharma major Dr. Reddy's as well. Moving on to the laggards, where is the pain felt? Where was the pain being felt today? Of course, from the auto space, it is Maruti Suzuki, the largest car maker, that lost about 4% in trade. From the FMCG space, it was Hindustan Unilever that crashed almost 3%. Telecom major Bharti Airtel losing over 3%. Coal India from the PSU basket dropping almost 3.5% in trade today. And oil and gas major IOC topping the charts as far as the laggards are concerned as well. Moving on to the new listings then today. Of course, it was a weak day of trade, so any kind of buoyant move that was expected by these new IPOs that were listing and making their debut was definitely not supporting the markets today. Lakshmi Organic, remember, 107 times was the subscription, extremely high retail investors' interest, but the shares settled at 26% up at 164 rupees on listing day. It had opened with about 20% premium to the issue price. The list price was 155, the issue price was 130. But still, even in a down market, you could see sharp uptick seen over here. But I'm sure this would have been an even higher number if the market sentiment was supportive. When you talk about Craftsman Automation, remember it actually listed with a discount of almost 9%. It did settle down with 5% losses at 14.15 on the listing day. The list price was actually 13.59, so that inched up above the listing price for sure. The issue price was 14.90, but still below the issue price for sure at 14.15 for this stock as well. Moving on to the primary market buzz, BBQ Nation IPO is again getting over subscriptions. 1.85 times it has got subscribed so far, and the issue will close on Friday, that's tomorrow. Yes Securities has given an avoid rating, while Angel Broking has given a neutral rating on this as well. But tomorrow we are hoping to get to you even the management voices on as to what to expect post the IPO and post the listing of BBQ Nation. So keep yourselves locked into Money9, because a whole lot of action is awaited there. Right up next, after this show, you can watch PF Counter, where we will update you with all the personal finance buzz that is making headlines in today's trading session as well. With that, we wrap up this show. Thank you for watching.